Friends, today we are going to discuss about company final accounts. Company final account includes balance sheet and profit and loss account. That is a statement of profit and loss. The Companies Act 2013 has given a specific format for the preparation of financial statements. Let's go through the details of the formats of the balance sheet. The balance sheet format is in the vertical form. The format is mentioned in the Schedule 3, Part 1 of the Companies Act 2013. The balance sheet has two parts, the upper part and the lower part. The upper part is equity and liabilities, and the lower part is assets. The upper part, which includes equity and liability, is similar to what you have studied about the liabilities. The heading is given as equity and liabilities, under which there are subheadings and sub-subheadings. The first subheading is shareholders' fund. Shareholders' fund is the capital employed in the business. The shareholders' fund includes share capital, reserves and surplus, and third point is money received against share warrants. We'll discuss all these points in detail in the latter part of this video. The second heading is share application money pending allotment. Third is non-current liabilities, and fourth is current liabilities. Under non-current liabilities, there are four subheadings. The first is long-term borrowings, second is deferred tax liabilities, third is other long-term liabilities, and the last is long-term provisions. Similarly, in current liabilities also, short-term borrowings, trade payables, other current liabilities, and short-term provisions. Make sure while doing the format of the balance sheet that the sequence is not disturbed. As it is a format given in the Companies Act, we are supposed to follow the sequence as it is. So the balance sheet liability part includes four headings. The first is again shareholders fund, share application money pending allotment, non-current liabilities, and current liabilities. Out of this, the second point, that is share application money pending allotment, is not there for your studies of standard 12th. The second part of the balance sheet is assets. Assets includes two headings. The first heading is non-current assets. The non-current means fixed. The non-current assets are further classified as fixed assets. You know, fixed assets are of two types, tangible fixed assets and intangible fixed assets. The tangible fixed assets are building, machinery, furniture, etc. Whereas intangible fixed assets includes goodwill, patents, softwares, and so on. The third subtitle is capital work in progress. This is nothing but the tangible assets which are under construction. The tangible assets which are under construction are classified as capital work in progress. For example, suppose the building is under process, then it will be considered not intangible assets, it will be considered as capital work in progress. Similarly, intangible assets, say software, if the software is under development, that will be considered as intangible assets under development. After fixed assets, non-current assets includes non-current investments. Next, deferred tax assets, long-term loans and advances, and the last one is other non-current assets. Out of this, deferred tax assets will not be a part of studies for our standard 12th. The second heading in the assets is current assets. Current assets are having the subtitles as current investments, inventories are nothing but stocks, trade receivables, cash and cash equivalent, short-term loans and advances, and other current assets. I specifically repeat once again that the sequence of these headings and subheadings are important. Now let's discuss these all items in detail. The first is share capital. The share capital includes all types of shares, that is preference shares and equity shares. All the authorized, issued, subscribed, called up, and paid up capitals are recorded separately in notes to accounts, as I have told you in the previous video, and only one representative figure of share capital will be a part of the balance sheet. Next is reserves and surplus. There are two parts of it. First is reserves and the second is surplus. Reserves are nothing but a part kept aside out of the profits. All the profits are used not only for profit, they are also used for some specific reserves such as capital reserve, security premium reserve, debenture redemption reserve, etc. etc. The profit and loss account balancing figure is considered as surplus. If it is having profit, it will be shown as positive figure. If it is having losses, it will be shown as negative figure. The next in the list is non-current liabilities. Non-current means fixed. Fixed is for a longer period of time. And for us, the longer period of time for considering as non-current liabilities will be a period of 12 months. Those liabilities which are payable after 12 months will be considered as non-current liabilities. Non-current liabilities, as we have seen earlier, are having subtitles, subheadings. The first is long-term borrowings. I have given few examples which will be considered as long-term borrowings. Debentures, bonds, term loan, a term of more than 12 months, public deposits, etc. will be a part of long-term borrowings. Next is long-term provisions. Provisions, that is the amount which is to be paid, but it's actually not paid, its provision is made for. For example, employee benefit provision. Let's take an example of employee provident fund. This will be a part of this. Provisions for warranties will be a part of long-term provision. After long-term provisions, the one more title important is other long-term borrowings. The borrowings which are to be repaid after 1 year are considered as other long-term borrowings. One of them is trade payables. The liabilities in the form of trade payables, that is creditors and bills payable, which are payable after 1 year, will be a part of other long-term borrowings. The last part of the liability side is current liabilities. As the name suggests, it is current in nature, that is payable within a period of 12 months. Current liabilities are further classified as short-term borrowings, which includes loan repayable on demand, that is short-term loans, overdraft and cash credit facilities given by the bank. It also includes public deposits for a shorter period of time. The second is trade payable. Trade payable, as we have discussed earlier, if it is shorter period of time in the form of creditors and bills payables, will be considered as a part of current liabilities. Short-term provisions, the provisions for the purpose of doubtful debts, provisions for discount both on the debtors, provision for tax and provision for depreciation will be some of the examples which are short-term provisions. Other current liabilities includes unpaid dividend. Generally, all outstanding expenses will be a part of other current liabilities along with pre-received income and calls in advance. This completes our liability side. Now let's move towards assets. Assets have only two headings. One is non-current assets and the second is current assets. Non-current assets, as we have discussed earlier, are tangible, intangible, capital work in progress, and intangible assets under development. I have mentioned few examples for your reference. Fixed assets, then there will be non-current investments. The investments which are held not for resale but for gaining purpose for a longer period of time, that is more than 1 year, will be considered as non-current investments. Long-term loans and advances. The loans and advances given by the company is an asset. If it is given for a longer period of time, it will be considered under long-term loans and advances. Other non-current assets. Long-term trade receivables, unamortized expenses or losses will be a part of non-current assets. Now let's move towards current assets. Current assets are having 6 subheadings. The first is current investment. The investments which are held for a short period of time, less than 12 months. Second is inventories, that is stock of different type. Raw material, WIP, that is work in progress, finished goods, stores and spares, and loose tools are few examples of inventories. Trade receivables in the form of debtors and bills receivable. Short-term loans and advances, any advances or loans given to either employees or outsiders, for a short period of time will be a part of short-term loans and advances. Then other current assets. Prepaid expenses, outstanding income, and advance taxes are few examples of other current assets. They are receivable within a shorter period of time. The most important is the last, that is cash and cash equivalent. It includes balance with the bank, balance of cash in hand, checks, drafts in hand, etc. These are all important points to be remembered while preparing a statement of balance sheet, and the headings, subheadings are important. You will find some red color dots. The first is on money received against share warrant, share application money, pending allotment, deferred tax liabilities, as well as deferred tax assets. These are been dots mentioned so as to make you understand that for your 12th standard studies, these items will not be a part of question. As they are in the format, we need to consider them as a part of your balance sheet. I hope the part of balance sheet is clear to you. Now let's move towards the profit and loss statement. Under the same schedule of Companies Act 2013, that is Schedule 3, format of profit and loss is mentioned. Profit and loss is also in the vertical format. It has few titles. The upper part is of income and the lower part is of expenses. Incomes are classified into two parts. Revenue from operations, that is the major source of income for a company. If it is a manufacturing or a retail company, the sales through manufacturing or sales through retail will be a part of revenue from operations. Whereas other incomes such as interest received, rent received, commission received, these will be a part of other income. Combinedly, the total of revenue from operations and other income will be considered as total revenue. After that, all expenses such as expenses on material, expenses on stock, employee benefit expenses, that is amount paid to the employees in the form of salary and wages, financial cost, depreciation will be a part of expenses. These all expenses are clubbed up together. Now we have total revenue and total expenses. The difference between that will be considered as profit. The difference between the total revenue and total expenses will be considered as profit. This profit is named as profit before tax because on this profit the tax is calculated at a prescribed rate, and thereafter we arrive at profit after tax. This is the final profit of the company. These are all the basic formats of the company final accounts. I hope you have gone through the balance sheet format and profit and loss statement format thoroughly. The questions on these will be in the form of finding out under which heading and subheading the particular item arises. For example, let's consider few examples. For example, equity shares. The headings will be shareholder fund and subheading will be share capital. Debtors, heading will be share equity current assets and subheading will be trade receivable. For land, it will be non-current assets, tangible assets. Trademark, non-current assets, intangible assets. Unpaid dividend, current liability and other current liability. Likewise, we can classify most of the items under heading and subheading. I hope the concepts are clear to you. Thank you.